And good morning, everyone. Welcome back to NeelyFX. My name is Michael Neely, and this is the channel where I talk about foreign exchange trading, and things like that. Prop trading. I like prop trading. We're going to be getting into that. Let me see. First, let's get into the risk disclaimer, since we're going to be talking about risk and stuff like that. And I'm in the United States, and I think this is required by law. I don't know, but I'm going to do it anyway. This channel is for educational and entertainment purposes only and does not constitute trading or financial advice. I'm a professional trader, or at least I'm trying to be, not a broker, trading my own capital. I do not solicit funds, manage client accounts, nor do I hold CFTC or NFA registration at this time. I have held NFA registration in the past. Forex trading is highly speculative with a high risk of losing some or all of your investment capital. Only trade the funds you can comfortably afford to lose. Now, CFTC risk disclosure goes like this. Forex trading carries a high degree of risk and may not be suitable for all investors. The high degree of leverage can work against you as well as for you. Before trading Forex, carefully consider your investment objectives, experience, and risk appetite. You could sustain a loss of some or all of your investment capital. So with that being said, let's go to here. Now, when it comes to the risk disclaimer, something I need to throw out there is that that's not a belief of mine. That is a government requirement. So if you can find a pattern that works, then trading is not risky at all. But it's putting in the years of experience to find the patterns that work and what doesn't work, and do more of what works and less of what doesn't work consistently. Consistently being the key word, and becoming a better trader. So that's really what this is all about. This is more about documenting my trading journey more than anything else. But here we are. We have the, let's start with the, it's the dragon I was looking at yesterday. Here's the DXY. DXY kind of did some good things yesterday. Came back above that 97.32 mark, which means we're going to have probably a stronger dollar. And here we have the euro versus the dollar. And again, since we're having a stronger dollar, the euro versus the dollar is going to come down a lot, and did on Friday. So there's a lot of action on Friday, which is I'm not used to. So it might be having to throw that no trade on Friday thing out the window, because I put in some trades yesterday. Let's see. The dollar versus the yen is, again, not taken off like you would think it would, with the DXY going through the roof. So that's not necessarily something that we want to see. It is coming up on this resistance trend line, so that may be having a little bounce down on that. But the range here is really not that well. Yeah, it's about 150 pips. Yeah, you can make a living on that. We can pay a few bills with that on 150 pip range. That's quite. Well, that's quite something I may want to reconsider getting into a sell about here, or 148.32. That was a period of support at one point. Now it's resistance. Now it should turn into resistance and turn into a great big buying area, selling area, as indicated by this red, according to my Smart Money Concepts plug-in, or not plug-in. What do you call them? Indicator. So that may be something I want to take a closer look at, is getting in this range bound dollar versus the yen, and seeing what happens with that. Let's see, pound versus the dollar, and again, strong dollar, weak pound versus the dollar. So that's what's going to happen there, and it is got the finishing RSI. RSI finished at 50 on that, 49. That's pretty interesting, considering the 20 was it a 14 period moving average is way down here, and is in the oversold area. So it's got a ways to go, I think. May come down here, maybe even come down to this, which I think is the monthly. I think that's the 4 hour, and that's the monthly support trend lines. So that might be something fun to look at next week. Here we're going to redraw our trend lines tomorrow, because some of the trend lines got broken over the week. This is one that maybe we want to consider redrawing the trend line on, because it broke out here. Yeah, we're definitely going to have to redraw it. It broke out here, topped out at I don't know where it topped out. Topped out at 201.26, and then crashed. It came right back down to 199.5. I put in a trade yesterday about, where did I put it in? I don't remember. We'll go over that in a minute. Excuse me. Let's see. Dollar versus the CAD. It's getting cooler in Maine, so we're starting to get a effect of colds coming back, seasonal colds. The leaves are starting to turn colors, and it's very pretty. Even Henry thinks so. You can't get enough. Yes, Henry, I'm fine. Come here. Come here, bird. The dollar versus the CAD. Again, we have a strong dollar, and we're going to have a strong dollar versus CAD. Probably should have gotten in on this, but didn't. Because I didn't think the DXY was going to sustain, but it did. I'm not sure what the catalyst was behind it. And that's really, I need to get out of that habit and just trade what I see and not try to think too much into it. Not try to think what the dollar versus the CAD is really, why the dollar's up. Dollar's up basically because the bond market's up. Let's go to the 2-year bond. Well, it's not up. It's not gangbusters. But it did bounce off the 3.5 area. It's come back up 3.5%. Let's see what the 30-year is. 30-year, which typically tends to designate what our real estate outlook looks like. Yes, Henry, real estate outlook. And it is going up again. So rates are going up. You know? Okay, Henry's done. So we're going to see a lot more inflation coming back. Sweet. So it's just getting cranked up now, but I'm not sure. Again, I don't have a crystal ball, but that is an indication that inflation's going to be coming up too. Here we have the because when you cut rates, it tends to make the bond market go down, which makes rates go up. So that's what you get when you cut rates. We've got 3 rate cuts in theory coming up over the next couple of months, so we're going to be looking at some stronger dollar scenarios. Come here, Henry. Ow. Henry's dominating my shoulder right now. The dollar versus the Aussie versus the dollar is yen down. Get out of this replay thing. Try looking at it. I said yeah. I said no, but I meant yes. Okay, there we go. The Aussie is doing well. I don't know. The Aussie versus dollar is again strong dollar, and you're going to get some breakouts to the downside for the Aussie versus the dollar. I had my end point coming in at 0.66, and it turned at 0.69, and then came right back down to 0.659. So that's another 100 pip move over a couple of days. Again, that'll make a few sandwiches too. So that's another good way to make money on that. Gold. I've had an infatuation with gold lately, and I have been playing gold very badly lately until yesterday. So we'll get into that in just a second. But gold is again perking back up again. It's going to perk up because we're in a rate cut scenario, which is going to give us a strong dollar, and gold. We'll see 38. We may see $4,000 gold by December. Who knows? Silver. $43 for silver, getting closer to that all-time high of $49.09. It was set back in 2009 or 2011, and the Fed is out of bullets, so we don't really see that coming down. Inflation is going to be coming up longer. We're going to continue to see an increase in what do they call it? When the rich keep getting richer, the poor keep getting poorer. That's kind of like that's been going on for millennia. That's not something that just that's not a new idea, but that is, we'll see that going on. We'll see that continuing. So with that being said, let's take a look at the trades. So here's the trade I got into yesterday. This is a buy stop. It did not get activated. 2-lot buy stop at 204. I thought it was going to bounce off of that and did not. So what we have now is it's came down to 199.39. We're looking at probably a buy limit, probably around here, around the 199 area, 199.04, 199.05, and see if it goes another 50 pips and then bounces. It's going to bounce at some point. We're just not sure where, unless the Japanese come up and say they're going to raise interest rates and then it's going to go to the floor. It'll go another 400 or 500 pips down because it's the dragon. It does that. The most volatile currency pair out there, and lots of potential for big wins and lots of potential for big losses too. So let's go back to the trading platform. So we've got, we've got to log in. I just joined a new trading competition too with Audacity Capital, so that's going to be fun. It starts October the 1st, and I have a $120,000 account to play with. So we'll see what happens with that. And again, it's a free account, it's a free competition. So that's where we're going with that. So here's the trade that got into yesterday. I was trading around 349, if I remember correctly. When I set this as 36.75, that's where I thought it was going to go with the next resistance area, and it did. And we're doing well on that trade so far. Let's see what happens to that. And then here's the other one. Yeah, 200.04, 0.04 for the pound versus the pound versus the yen. And again, it makes me nervous trading that, but that's why I should trade it, just to get it out of my system. That makes me nervous to trade it. So if I can trade the most volatile, I can easily trade the lesser volatile ones. So that's what we've got today. Not a whole lot going on. I'm also still very infatuated with this. Where'd it go? Come back. Yes, I use Grok. ATR multiples for setting stop losses. So the way that my new stop loss thing is going is that we're going to set we're going to look at the ATR and develop a multiple strategy for 2x ATR for stop loss, especially with the look at that one, the pound yen. If you got a 157 ATR, then your stop loss is going to be 300 pips. I don't think I want to be in that market. That's just too much, too fast, too everything. So, however, on the USD market, this is on I think that's got to be on daily time frames. But the 4 hour looks like this: JPR pound versus the yen. You're looking at 50 pips stop loss or 75 pips stop loss. When I set that trade yesterday, it was had an ATR of 43. So it was 96 was my stop loss, since with a 2 ATR strategy. And then we come over to the position size and then develop it there and set our account balance, risk percentage of how much we're going to risk on this trade, and then the stop loss. And then that's how we come up with the position sizing. So that's a kind of fun thing I've been doing lately, and hope that may help you. No one ever told me how to set stop losses, so I was like grabbing numbers out of the air, 30, 50, 70, who knows? But what I found is that it does work better this way. Maybe later on I'll get into some strategies where I'm not setting any stop losses, but I will probably be in the office all day for that. So with that, I'm going to let you guys go. You guys have a great one. I've got to go to work soon. Go to work to my day job so I can continue to make these videos and stuff. If you like this video, then please like and subscribe, and we'll get you some more videos coming out soon. In the meantime, talk to you later. Have a great one. Bye.